You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back here on the old network one final time, at least for our on-demand broadcast week. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network upon which so many of you have been sucking down the bandwidth this week. Go ahead, keep it up. There's more where that came from. Remember, if you just listen to Vol Views, and Vol Views get a lot of love these days, which is always nice. A lot of people writing in and just seeing people out and about at different functions saying how much they love volatility. We all appreciate it all. We thank you all for taking the time to listen. Remember, if you like what you hear, don't just tell me, even though it's fun to hear it. Throw out a star or like a comment on whatever platform you're listening on. All of that in aggregate does help new people, and there are clearly more people discovering the show all the time. All does help those new people continue to find a path to the show. B, if you're just listening to Vol Views, man, what are you doing? I get it. Vol Views is fun. Got a whole network there waiting for you as well. And then C, if you want to go above and beyond, maybe, I don't know, you don't want your broadcast week to end with Volatility Views. If you like this party, then wait till you hear the party that is Options Oddities. Got some fun stuff to talk about there coming up in a little bit as well. Some action in some core holdings on that program. Let me put it that way. You want to hear what the hell we're talking about? Check out all the great archives, all the great Pro Q&As. You like Vol? We just did a whole Pro Q&A with Scott Nations, as we can't keep that guy out of the Pro Q&A hot seat. He'd be in there every week answering your questions if we let him. So you want to go pick the brains of some of the best minds in the world of options and derivatives, and indeed volatility. Only one place to go, theoptionsinsider.com/pro, the place to go to check it out for yourself. See, it's a lot more than just Vol Views, listeners, even though we do love Vol Views. It's one of my favorite children at the end of the day, even though they're all my children out there. And let's see what kids are joining me on the old Vol Views panel today. Starting off with the greasiest of meatballs from the Southern Volatility Mecca. You know him, perhaps you love him, as Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to Volatility Views, sir. How's your week going?
Going well. I'm excited to be here. We got plenty to talk about in the vol space.
Yeah, people might have thought when they were tuning in this week, it's going to be a sleepy show heading into a holiday week. Not much really to talk about on the vol space. Surprise! We got a lot unfolding this week. Got some development, some action, some drama, some controversy, all sorts of fun to be had on the show this week. And joining us to parse all this madness, he hasn't been on in a little bit, but he's been on the Pro Q&A, going back to people answering your questions about vol. But he hasn't been on Vol Views in a while. Our old friend, Mr. Jim Carroll, now wearing a new hat. He is the Senior Wealth Advisor and Portfolio Manager at Ballast Rock Private Wealth. Jim, welcome back to the show. How's that new hat fitting you, sir?
Thank you, Mark. The hat is very comfortable. I've joined a new firm with some new partners, a group of Wall Street refugees. We know how the sausage is made, and we're out working with our collective group of high net worth individuals to keep them on track. And, ballast rock is something that you put in the bottom of your sailing ship to keep it steady in rough seas, and that's what we do.
I must say that new hat, very becoming on you, sir. I like the pink feather. It looks good on you.
Me too.
I threw him for a loop. Stunned silence there, listeners. All right, so with the team assembled, all the children in tow, I'll be the Pied Piper for today's show as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let us commence operations here. A little bit of the old Volatility Review, the portion of the show. We break down everything lighting up our tapes this week and indeed today out there on the vol front. And again, you might be forgiven if you thought kind of a sleepy end to the week. Not much vol going on. Vol slowly eroding as we're heading into what is usually a pretty quiet, a pretty thin Thanksgiving holiday week. But you might be surprised. Some stuff popping off out there. Of course, we continue to threaten to break this 4,500 level to the dark side after just seemingly endless rally. It's only been really a couple of weeks. It seems like it's just been endless. It's every day a couple of percent, it seems like, to the upside. Unless you're looking at small caps, in which case they can just do 5% in a day. Why not? By the way, if you want to deep dive into some small cap options fund, a lot of paper popping off out there. Go figure this week. Make sure you check out TWIFO from yesterday. We did a deep dive into RUT options. Haven't done that in a while because there hasn't been a lot of paper. And then this week, they kind of blew the doors off from an options volume perspective. So, again, not surprising. They're moving 5% at a clip, but some fascinating stuff cooking out there. It's not all just the 0-day phenomenon we see in the E-mini SPX or S&P 500. So, yeah, interesting stuff out there. Interesting stuff in the vol space this week. Coming into the start of the show, the major markets are mostly mixed. We have the S&P up slightly, not even 0.1%. Still trying to break. They tried a couple of times this morning, it seems like, to break that 4,500 level to the dark side. They bounced off it every time. So we'll see if we make another run at it or if we're turning back to the green now for good for the rest of the day. Dow off slightly again, not even 0.1%, and the NASDAQ about 0.05%. So we're kind of really hovering around unched right now. As we all know, listeners, one thing we won't do is stay here. We'll be somewhere by the end of the session. We'll be up strong. We'll be down strong. We'll be up or down slightly. We won't be pretty much unched like we are right now. So intriguing stuff out there. All this means our vol friends coming in slightly from this time last week. VIX cash back below the 14 handle. 13 3/4 as we're kicking off the show. Down about 3/4 of a point. VVIX, the vol itself, taking a little bit of a hiatus as well, at about an 82 when we kicked off the show. That puts it down about 4 points from this time last week. So again, vol has come crashing down. It was well north of triple digits back heading into all the Powell madness. Since then, we've seen a lot of juice come off the top. Again, not exactly surprising, but a lot to unpack and a lot to get to on the show today. Let's start with our guest. We'll give you pride of place, Mr. Jim. I wish it was a video show, listeners. You could see Jim's fancy hat. It really is quite compelling and certainly quite eyebrow-raising. But Mr. Jim, fancy headwear aside, sir, what's catching your eye out there in the vol markets this week?
Yeah, I've got several things that have been catching my eye. And, when the markets are behaving, people tend to go to sleep, and so you can't blame them. But one thing I noted earlier in the week was that the volatility, the VIX term structure, had actually found some real contango, which had been missing for quite a while. The spread, and I posted a chart on Twitter the day before expiration. But, we're in terms of spreads between the front month and VIX and the front month, second month, third month, we're distinctly above average in terms of those spreads, which, assuming that things remain stable, which may or may not be the case, there's some juicy premium in that roll down. The other thing that I wanted to point out was that the short vol trade for those intrepid explorers has been very profitable in this rally that we've seen starting at the beginning of the month. If you just use SVIX as an example, if you jumped on that train, at the end of the month or the first day of November, you're up between 20 and 30%, depending on where you entered. SPY's up about 9, Qs are up about 11. So, that's a kind of a 2x to 3x of what you got in the indices, which is pretty attractive. And by the way, if you had gone the other direction and shorted UVIX, the old two-timer, it was up at about 40, and it's, right around 21, 2 weeks later. So, again, lots of cash to be found in the vol trade either direction. I'll leave it there and let you carry on.
Yeah, UVIX has been, we talked about it, just the beast got unleashed upon the vol markets. It gave up 16 of those handles in less than a week, a couple of sessions, really. It was an explosive move to the downside. So, yes, certainly some fascinating things to be said there. We'll get to all that fun in a bit, listeners. A lot of fun popping off in the vol ETPs. No shortage of drama as well. Before we get there, though, Mr. Meatball, same question for you. Again, people thought it would be a sleepy week this week, and if you look at just the net vol numbers, maybe that is the case, but a lot more to be found under the hood. What was catching your eye this week and indeed today from a vol perspective, sir?
I feel like we had a day where the market just went parabolic this week, and that was interesting. They really like that CPI number, and then since then it's been a whole lot of nothing, just kind of sitting around watching realized vol die, watching implied volatility die. As Jim said, the VIX curve is back in contango. We're getting ready for the holiday season. They're already starting to really price in, the Thanksgiving break. That December future is below 15, which is astounding. And trading, barely a point above where the cash index is, which tells me that and I know we'll talk about it, but they're pricing the cash index like it's going to be sub 13 next week.
Certainly does seem to be the case. And speaking of big moves out here in a single session, I mentioned small caps earlier. Small caps saying the heck with this UNCH day today, up about 1.3, almost 1.4% out there. Weeks like this, we used to say it a lot on the show. In fact, when SIBO launched the RVX options, we were one of the few, if not the only show that ever really talked about them. In fact, we had FTSE Russell on the show as a sponsor for a while because we were talking about them. We were the only people out there talking about RVX options. They kind of went the way of the dodo. RVX is still an index that is obviously disseminated, listeners, but no tradable goodies on that one anymore. Man, just think about that, Mark and Jim. Think about what could have been done out there in RVX this week if we actually had something tradable out. I mean, this thing, the index itself moved 5% in one session. Do you, like me, Mark, miss the days of trade? Did you ever trade any RVX when it was listed?
I tried, but there was just zero liquidity in those options at the time. So it was very difficult to get anything filled. But yeah, kind of certainly interesting watching the Russell move around. It tried to get to its 200 and then just, it actually touched it and then died. A quick and painful death. While the S&P is having a really nice week, RVX, Russell 2000 continues to move around a lot every day, even if the SPOOs themselves are not.
Jim, now that you're wearing this fancy new hat over there at Ballast Rock, has this past week maybe giving you any inducement to look over in the small cap land and say, maybe we need to start dipping our toes in those waters? Or maybe is it the opposite? Are those waters a little bit too tempestuous for you right now, sir?
Well, and Mark's exactly right. There's been a real tempest. I mean, we had that one day that was like up 5% or maybe a little more, where they just shot out of the box, but they've retraced a big chunk of that. They've definitely been more volatile than their larger brethren. So I think that the market tried to broaden out and then has retraced some of that breadth since. And so I think people are looking more at the SPOOs and the Qs and the Magnificent Seven as the places they want to be. Some things are slow to change, and I'm not seeing a lot of love for small caps yet.
They certainly can be. We say UVIX is quite the wild beast these days. Small caps, not far behind. They're kind of marching to the beat of their own drum out there, which is kind of fascinating to watch in and of itself. Again, check out TWIFO from yesterday on the network, listeners, if you missed it. A little bit of a deeper dive into what's going up out there in rut options. Let's keep rolling. Let's go out. Jim mentioned kind of the return of some juicy contango out there. All you folks who are getting yourselves a little bit of downside in UVIX or VXX, whatever your product of choice, your weapon of choice is out there, you're enjoying the return of this healthy contango. Of course, we saw November roll off the board since our last show. Had some fun trades around that. Maybe we'll get to that a little bit later in VIX options. But December now, the pole position future out there, listeners, that's down a full point from this time last week. The Jan future right behind it, also almost down a full point, right around 0.85 or so coming into the start of the show. So the front portion of that curve getting annihilated, as Mr. Jim was saying. So nice, healthy contango. You go all the way out to the middle of next year. You go out to, let's say, June, July timeframe, and you're looking at about an 18.5 in June and about an 1880 in July. So again, a nice, healthy contango returning to the vol markets, which for a lot of you out there, that's what you like to see. Mr. Meatball, what's catching your eye out there in the world of the volatility surface this week, sir?
Well, like I said at the top, the curve, I mean, December futures are below 15. They've got almost 5 weeks to expire. So they're really pricing vol like it is going to crater here into Thanksgiving and stay low through December. That is what they are doing to premiums here today. And so, are we going to come in on Monday and not get a weekend effect and vol's going to be down more? They're kind of pricing things that way. Vol is just, there's zero bid for December futures. I thought they were cheap last Friday. Now they're even cheaper today. And who knows how low they're going to go.
It's almost like there's some seasonality to this vol thing. Crazy what's going on. It
is.
Out there. Mr. Jim, you were tweeting about this. You mentioned it at the top of the show. Obviously, the return of contango, a very welcome sight to you and everybody who's reading your musings over there on the old Twitters. What was catching your eye in this now, once again, healthy contango volatility surface, sir?
Yeah, other than the spreads on the front end, which, relative to history, are very juicy. As Mark pointed out, you go all the way out to July and you're below 19. And it wasn't too long ago where most of the term structure was above 20, healthily above 20. So it's reasonably clear that whoever's trafficking in these VIX futures are showing less respect than they were not too very long ago.
That is indeed the case out there as we keep on rolling, getting into the land of VIX mothership options. Before we get there really quickly, Mr. Meatball, we know VIX rolled off the board for November this week. We were talking on the show last week, and I was scouting out some downside VIX put positions heading into the show. And then you were talking on the show, I believe they were the 14s for about a dime and the 14 half puts for somewhere around 25 cents. You said you were eyeballing those as well as kind of some cheap flyers going into settlement this week. And so after the show, we were talking, I ended up adding the 14 halves to my list of puts that I was working orders in. Those ended up getting filled. They ended up working out pretty good. They were about a 2Xer going into settlement. Again, I took them off, listeners. We counsel on this show. Don't ride things through settlement, and I tend not to do that. That worked out pretty well because I ended up buying them for somewhere around a quarter, I think, and I ended up dumping them for at least a 2Xer. So not bad. Mr. Meatball, did you get any of those downside puts you're talking about? Did you put any of those on last week?
Yeah, Andrew and I ended up doing a 15-17 strangle, and I bought the strangle for 80 and sold the puts at 140 on Tuesday, which was pretty nice. Yeah, they came for it. They crushed that November future pretty good, and they're not backing off on December at all. I mean, December, the way it's pricing is that absolutely nothing is going to happen for the next few weeks. So be prepared for some paint drying here. That would be my play here right now, folks. You
guys are becoming quite the stranglers out there in VIX options. Let me ask you this. What percentage of time is it that the puts pay for the whole show versus the calls?
The calls rarely.
Yeah, 90% of the time is the puts, right?
But it's nice to have those calls. You can develop. It's actually a very good way to kind of set up a hedge. In that, if the market does truly blow up, your position is protected, but you're financing it with puts, and with the juice that you get out of the puts. So that's been a really nice trade. We're toying with doing something kind of extra fun with that approach that maybe we'll be able to talk about in about 3 months.
It's funny when you think about it. You're paying more because obviously the calls are bid. You're paying more for the leg that you don't really intend to pay off. You don't think it's going to pay off. It's kind of a backwards logic for this product, but that's the way it trades out there, listeners. So let us know. I know a lot of you like to play in the puts. Do you play on the call side too, strangle side? Maybe do you do a strangle with the call kicker above it, so you're buying the call spread, so you have something to sell against it. You're not just buying upside willy-nilly. I'm curious. Hit us up. Let us know. It might be a good, kind of hard to do that in a 4-response Twitter poll, but it might be a fun question of the week to see how you're approaching VIX right now. A lot of people are approaching VIX today. You'd be wrong if you thought it was kind of just a sleepy, snoring kind of all day. Already, listeners, 812,000 contracts on the tape in VIX land. I wonder what's going up. I guess we'll find out in a little bit, listeners, but a lot of paper going up today. That's already north of the ADV, which has been coming in pretty much for the better part of the last week because we're heading into Thanksgiving. So we're right back to right around 750,000 contracts as the ADV, back below I think it got up to around 935 or so, which we said then that's not really sustainable for, VIX over the long term. And again, it's down 84,000 contracts this week, but it is the Friday heading into Thanksgiving week as well. But again, 812 on the tape today. So the game is afoot clearly today heading into the weekend. We're going to find out what that is and what the game is in a few seconds. First, let's break down the top 10 positions. What's open for size in VIX land now that Nove has rolled off the board? And for all of you out there, we're just talking about the puts, how much you love the puts. For all of you who love the puts, I got bad news for you. Nove rolled off the board, took all the puts with it. There is not a single put to be found in the top 10 in VIX land right now, which is fascinating in and of itself. We kind of throw this out as an indicator, partly tongue-in-cheek, partly it's kind of fun. I know some people have kind of rallied around it now as a bit of a useful indicator, but it's partly for fun. But we have not seen it all calls all the time in quite some time. Now, that in and of itself is interesting, also indicative of where we are just structurally in VIX. Once you get below a 14 handle, there's just a dearth of strikes left, so there's part of that as well. But it is still fascinating to see. It's been quite some time. I'll have to go back and look. We'll have to go run the numbers and see when the last time on the show was where we had unanimous opinion in one direction, at least from a call or put perspective. And it's been some time. Cost you 191,000 contracts right now to break into the top 10. So again, for a sleepy weekend heading into Thanksgiving. That's actually a fair amount of paper for VIX. That gets you to the April 60s, 6-0s. We're right back at it, listeners. No messing around in VIX this week. Number 8, 192 of the Jan 28th, so kind of all over the place again. Number 8, 211,000 of the March 47 halves. I do love the love for the 47 half strike. I find it fascinating. Number 7, 213,000 of the Jan 45s. 45s I can see. More of a round number, easy to wrap your head around strike. But for some reason, a lot of folks gravitating towards the 47 halves. Like number 6, 231,000 of the Jan 47 halves. So if the March 47 halves may be a little bit too long term for you, allow me to present 231,000 of the Jan 47 halves. So number 6. Number 5, 232,000 of the D's 45s. Right back at it again, listeners. Number 4, 235,000 of the D's 25s. So one of the more, dare I say it, normal strikes and months on the list. Number 3, 313,000 of the Jan 26s. So it's just a Jan call strip, listeners. Number 2, 342,000 of the D's 40s. And you know what number 1 is by now, 344,000 of the D's 35s. Those two strikes have kind of been uncontested at the top of the leaderboard for a while. But let's get into some of this paper this week. Mostly today. Actually, I take it back. There was Wednesday had some paper as well. But today looking surprisingly robust, listeners. Let's see what the hell's going up out here. 812,000 contracts on the tape. The big dog today, 102,000 of the Jan 27s. Interesting. Let's pull it up here. Of course, everything I have is all logged out now. Let's pull it up here really quickly, and let's just see where those bad boys are trading right now. Looks like they traded 50,000 of them for 70 cents, another 30,000. So around 70 cents, Liz. That seems to be the price out there. Jan 27s for 70 cents. Would you rather buy those or sell those, listeners? Might be a fun flash poll to do here on the show. But intriguing stuff. Certainly where we're heading into this part of the year right now, the seasonally quiet part of December, you probably might want to sell them. But then for January, all bets are off. January's kind of been a weird rocking period the last few years. Always a surprise or two in the market's back pocket for January. So number 2 today, 78,000 of the D's 20s. Number 3, 43,000 of the D's 15 puts. So some puts making it into the conversation today. Number 4, 37,000 of the D's 13 puts. And rounding out the top 5 today, 32,000 of the Feb 36s. So even today, kind of all over the place, listeners. Yesterday, kind of more what you expect, a little bit quieter, 506,000 contracts. But again, Jan upside leading the dance. Somebody's got a huge axe to grind on this Jan upside. 104,000 yesterday. So fully a fifth of the volume going up yesterday was in these Jan 26s this time. So today we have Jan 27s, 102,000. Yesterday, Jan 26. Are they legging into a $1 vertical? 1 day apart? That would certainly be interesting. I don't think that's the case, listeners. Number 2, 34,000 of the D's 14 puts. Number 3, 20,000 of the D's 15 puts. Number 4, 19,000 of the D's 17s. And rounding out the top 5 yesterday, 15,000 of the May 60s, 6-0s. You always got to slide one of those in there every day, listeners. There's some, shall we say, optimistic strike sliding into the mix. Wednesday was a banger day. 1.24, just a little bit shy of 1.25 million contracts. That's pretty active. And the big dog, take a guess, 203,000 of the Jan 26 calls. So again, that explains why our number 3 size position in VIX options right now, 313,000, of the Jan 26s. They've been pretty active this week, including 203,000, obviously all of that opening on Wednesday. Right behind it, 118,000 of the D's 11 half puts. Man, 11 halves. That A sounds ridiculous, and B, given where we are, that's not that far away. Number 3, I should say, 116,000 of the Jan 28s. So right back to the Jan strikes. Here we go, listeners. Number 4, 35,000 of the D16s, and rounding out the top 5 on a very active Wednesday, 34,000 of the D's 20s. Tuesday, no slouch either, 1.1 million. The top dog on Tuesday, not Jan upside this time, a rare break from it. It's 111,000 of the November 13 puts. Again, we were heading into expiration on Wednesday, listeners. Number 2, 92,000 of the no 14 puts. And number 3, 89,000 of the no 15 puts. Number 4, 37,000 of the no 13 half puts. And rounding out the top 5 on a very busy Tuesday. I'm all over the place today. Very busy Tuesday. 36,000 of the D's 14 puts. So if you're wondering where all your put paper went, it was all on Tuesday, listeners. And Monday, 681,000 on the tape. The big dog on Monday, 39,000 of the D's 14 puts, followed by pretty much a whole bunch of puts. Number 2, 34,000 of the no 15 puts. Number 3, 27,000 of the no 14 puts. Number 4, 25,000 of the no 14 half puts. And rounding out the top 5 on a decently active, but not blowing the doors off Monday, 22,000 of the D16 puts. Mr. Jim, we will start with you. What were your thoughts on this paper? We saw some days kind of what you expect heading into Thanksgiving week, not much on the tape. Then other days like Wednesday and Tuesday, even today, very active, including this explosion of Jan upside. Did you notice this? The 26, the 27s, 28s, all sorts of strikes lighting it up this week. And what are your thoughts on this, all this Jan upside going up this week, sir? A lot to unpack.
Well, first of all, I want to know what Mark's going to do with the 3540 in the D's. That's
small size for him. He doesn't put up 300,000 is too small for him.
But I'm not sure what to make of some of this activity, because it looks like some of this could be spreads on both sides, in the calls and the puts. And I'm just not deep enough into what's going on in the pits to decipher who's doing what to who. But it's big.
It certainly is big. Mr. Meatball, Jim wants to know, what are you going to do with your D's 3540 for size out there? And then B, what are your thoughts on all this explosion of Jan upside going up this week, sir?
Yeah, it's been interesting. I think that, this circles back to the fact that vol's now cheap enough where it makes some sense to put hedges on if you're in credit or in equities, right? We've had a nice rally. The bond market's pulled back. VIX is 1377. Those futures have really pulled back. So if you were ever going to time putting on a hedge, makes total sense to me. I don't know what would come up, but that would be my guess, is that they're just looking at the value they're getting for their hedge and deciding, yeah, you know what, this can work now.
I will add, Mark, that our buddy Jim Carson was out on a Real Vision interview talking about the possibility, no certainties ever, but the possibility that, January would be the next opportunity for, some surprise to the downside.
That would not surprise me, pun intended, at all, just given how we've seen so many, January, not historically a rock'em sock'em period. And then certainly even not even post-pandemic, even everyone forgets what happened in January of 2020. We assassinated that Iranian general, and vol started popping off even then, well before we got into February and March, and we all know what happened from then on. So yeah, January, certainly for the last 3 to 4 years, you don't come in like a lamb. It comes in like a lion the year. So definitely, I can maybe see an argument for I'm not sure if I want the Jan 28s or the 27s, but I can maybe see an argument for a little bit of upside action out there. Speaking of upside action, this name has been putting up some upside this week. It is our old friend SVIX, 32.5, up a little over 2, about 2.15 points from this time last week. Put up some numbers today, 3,900 contracts. Actually, I take that back, 4,400 contracts on the tape. Just had a nice little pop out there. The ADV is 3,900, so that's moving in the wrong direction. It's down about 600. But in terms of action outpacing that today, it looks like the big dog today, 1,000 of the D's 34 calls, and we also have 1,000 of the March 50s, 5-0s. Uh-oh. Sounds like our buddy, Mr. Chris Sidial, coming back with a crazy upside SVIX call by, just so he can get back on the show. He bought the 35s when SVIX was 13. Now maybe he's buying the March 50s when SVIX is 32.5. If we have him back on, we'll have to see if that's him again. But fascinating stuff. A lot of fascinating things going on in SVIX. I want to get to all that in a second. Let's break down the top action out in here really quickly. If you're looking for the number one size position out there, you better look quick, listeners, because it's the NOV 28s. So these are looking pretty good. 3,900 of those. Those are obviously going the way of the dodo today. So what will replace it? We got 1,500 behind it of the D's 10 puts. If the D's 10 puts come into play, something really crazy is happening out there in the markets. So intriguing stuff out there. even more intriguing, and Mr. Jim, I want to get your thoughts on this, because we were talking last week about this whole drama, brouhaha controversy around SVIX. We had our buddy, Mr. Russell Rhodes, on the show last week, and he was mentioning that starting this week, starting on Monday, SVIX making a change to their prospectus, saying they will now incorporate not just VIX futures, but also VIX options into their holdings. And I was kind of mixed minds about that. Russell at the time was saying he assumed, I think all of us assumed, obviously, that they were going to be buying VIX put options as a way to incorporate what they do out there, obviously SVIX and inverse product listeners. And I was kind of two minds of that. On one hand, I thought it might maybe tamp down some of the performance of the product. On the other hand, if they are indeed using puts as opposed to, short futures or other things to replicate that inverse VIX action, it does eliminate some of the risk of a 2018 XIV type blowup happening again. If all your risk is the premium you paid for a put, probably not going to go the way that I say probably, and there's no guarantee, obviously, but the risk of that is much lower. So I was of two minds on that. A lot of you were as well. A lot of people were chiming in on that. That was very much obviously a salient point for a lot of our listeners. A lot of you obviously trade in SVIX right now. A lot of people chiming in, including we had Gambler here. He said, looking at the SVIX holdings on the Vol Shares site, they may obfuscate the options holdings by labeling it as, quote, SIBO VIX options. So we have no idea what the strategy actually is. I personally don't like this because it's a less pure product now, but we'll see how it plays out. Yeah, I understand that. I have similar misgivings. That said, our buddy Mr. Rhodes is off in London right now at a conference, but he had to reach out because he wanted to correct himself. He assumed that they were going to be buying puts, as we all did. Turns out that is not the case. It's actually the opposite. They are buying VIX call options. So he pulled it up right before show time, listeners, and that is indeed the case. Right now, one of the largest holdings in terms of number of units, it is the largest holding in SVIX right now, are 28,000 of the DEES 27s. So, yeah, they're buying VIX calls. I don't think any of us had that on our books when we were talking about this last week. So, Jim, a lot to unpack there. Let's start with just the general switch from futures to incorporating options. Are you plus or minus that? And then B, are you surprised that they're actually buying VIX calls and not VIX puts, sir? A lot to unpack.
Well, let's just say that I may know a little more than the average observer. And so I'm not surprised that they've added some call exposure to their portfolio. And I think it's safe to say that it really is designed to be Volmageddon protection. These are, forget 50 cents, these are half a 50 cent, those options are, maybe 25 cents if you wanted to go out and buy a bunch of them. And so it really is a, downside risk mitigant as a piece of the portfolio. They will do their very best to continue to provide the return of the underlying short vol index. And, there may be a little slippage back and forth from time to time, but, these are the realities of trying to manage what is inherently a volatile exposure. If you don't like it, don't use it.
So it sounds like you're a little bit of both minds as well. You kind of like the fact that maybe it is a little bit of implosion protection, but do you also maybe worry that it will impact some of the performance of the product?
Look, I think that it certainly could have some marginal impact on their ability to track their underlying index. But I would suspect, because, these are smart people who have a lot of experience in the derivatives world, that they will do their very best to track the index and deliver the return that investors expect.
There you go. He has faith, listeners. Mr. Meatball, you're a man of little faith. So what do you think about this? First off, Where did you fall on this when we talked about it last week? Did it make you more or less excited about the product? And B, now are you surprised, like the rest of us, maybe that they're actually buying VIX calls? And what are your thoughts about that versus VIX puts?
Well, if you think about what caused ProShares to have to kneecap their the UVXY, it's entirely possible that their clearing firm or prime firm asked them to have some cheap upside so that they don't blow up. So that might be a reason behind why they would do something like that. You know, I thought they would do something like in the money futures, in the money puts as like a replacement for futures, which would have been, you know, kind of done the same thing. But apparently this is they're using these as some sort of hedging program.
So it doesn't give you pause about the performance of the product at all?
I think they're going to still accomplish what they need to accomplish. And if you want to just kind of sit in a short vol product, you know, SVIX is the way to do it. If you're not going to go out and buy puts on UVIX.
Yes, that's not for the faint of heart, as we have established here on the show before. It might be a fun poll question for next week about, does this change to SVIX make you more or less inclined to trade it out there? Speaking of polls right now, you guys are chiming in fast and furious. We asked you, would you rather buy or sell the Jan 27s for 70 cents right now with over 100,000 hitting the tape as we speak? You folks are again, of two minds. You're a little bit split out there. 55.6% saying you want to buy them. 44.4% saying you want to sell them. Age, one of our pro members, saying sold to you. He doesn't like himself some upside. Scott Bauer, been a guest on Twifo in the past, saying he saw a huge volume as well on the Jan 26 and 28s. Yep, we talked about that earlier as well. So yeah, a lot of upside in VIX land. Are you a buyer or a seller at these levels, listeners? Get over there at options and let us know. This one, we'll let it run through the podcast. So when the podcast goes live, you'll have a chance to vote on. Obviously, won't be a question of the week. So you don't have a lot of time. Get over there at options. Make your voice heard. Speaking of not a lot of time, you don't have a lot of time to catch the downside on UVIX because it's moving so quick, listeners. UVIX right now, 20 and a quarter, down a little over 3, about 3.15 points from where it was this time last week. Looking pretty robust out there today on the options front. 10K hitting the tape right now, which is kind of interesting. That's actually more than the ADV. The ADV is 9,000. So more, again, it's kind of a surprisingly active day out there on the vol side, listeners, including the big dog out there today. Take a guess really quickly. What do you think? UVIX is at about 20 and a quarter. What do you think the most active contract is out there today, listeners? I'm betting most of you did not say the 21 calls expiring next week, but that's what we have going up today, about 1,500 times all opening. Let's look really quickly and see what they did out there. Looks like exactly mid-market for 95 cents, listeners. So maybe a bit of overwriting out there. It's hard to tell. But again, that could be another poll question. If you sell those naked, you're a braver man than I. But if you buy them, yeah, that's another one. Say goodbye to your 95 cents. Probably. Again, past is not prologue. But again, upside call buyers with a week to go in UVIX going into a holiday week where we know vol usually goes to die. That would be a weird one. But again, we've seen weirder things out there, listeners. In terms of size positions right now, the big dog in UVIX, you know the deal right now. UVIX is pretty much all dominated by this post-split adjusted nonsense. We have to go all the way down to probably about number 12 or so to find the first non-split adjusted. And this is, we have about 1,600 of the Nove 24s, and those are going out today. So, spoiler alert, they did not work out well. If you were buying them, if you sold them, which is, again, these went up kind of mid-market as well. If you sold them, maybe a little bit happier, smiley face for you out there. Mr. Jim, we haven't talked to you since this mad beast that is 10x reverse split UVIX was unleashed upon the market. Let's start there. What were your thoughts when UVIX went from a sub $2 just ridiculous piece of nonsense to a almost $45 rampaging beast? And were you trading it? And what are your thoughts on the just massive downside we've seen since then?
Well, I referred to the massive downside at the top of the show, which, is obviously the inverse of the upside in the equity indices and in SVIX. UVIX is a beast, and it will have to reverse split on a recurring basis. There's just no doubt about it. That's part of the program. And there will always be somebody criticizing the size of the reverse split. Clearly, you'd like to keep UVIX in a, let's call it a $20 to a $50 range. That's not going to happen. You'd obviously not like to be in the options around the time of the reverse split, but that's going to happen. So, and UVIX is the same. So if you want to play these levered long vol ETPs, you just have to get used to reverse split and option adjustments. And if you can't do that, find something better to do.
Our chat is chiming in saying sold. A lot of you saying sold on those Jan 27s for 70 cents. No buyers, no takers in our pro chat. Mr. Meatball, same question for you, sir. What's catching your eye out there as UVIX continues to go the way of the dodo, sir?
Yeah, it is losing. Its decay is pretty darn big, and with that D's future dying, this thing is just going away. But the nice thing is the option activity has really increased here. It's a lot easier to get in and out of stuff. There's a lot more trading around it. So I'm excited to get to play with it.
All right. Speaking of playing with some inverse products out there, listeners, we have to get into this one because I know Mr. Jim, you just mentioned it. Our old friend UVXY, or as you cool kids like to call it, UVIXY. I just can't say UVIXY. It just there's no I in there. So UVXY to me. But 11.10 right now, down a little over one, about 1.3 points from last week. Today, doing decent numbers, about 70,000. The ADV is right around 126,000. So kind of unched on the ADV front, unlike everything else, which has been giving up volume. But Mark and I were kind of openly questioning last week who out there is trading UVXY when UVIX is back in the game. And it led to an interesting discussion, an interesting debate, which unfolded into a little quick flash poll that we did during the show last week, which I know you chimed in on. You were trying to game the system, trying to get all your fellow UVXY compatriots to game the numbers. Well, congratulations, sir. You were successful because our poll, do you still trade UVXY with UVIX in the market? UVXY took it with yes, 59.4%, 40.6% saying no. A lot of people chiming in. Ubernaut saying he never once used to trade VXX, but that was age. So he voted, but he's never traded it. That's interesting. Jerry Sue, he's like me. He said, wow, surprised people are split. We need more YOLO options buyers on this bad boy. Yeah, I'm kind of with you there, Jerry. And then John Killian saying he likes UVXY, better option liquidity, and I switch between when one is in need of a reverse split. So, Mr. Jim, I would put you out there as the standard bearer for the UVXY defense force. So go ahead, sir. Defend yourself now to our audience. Why do you prefer UVXY versus UVIX?
Well, now, let's not overstate it. I don't have a strong preference. And in fact, like the UVIX, if you're trading the underlying, the reason UVIXY still has fans, sorry, Mark, I have to say UVIXY because you won't. The reason UVIXY has fans is because its option chain continues to be robust and active. As Mark pointed out, UVIX is trying to catch up, and it may well do that. But, you've got quite a few people that I know out there who are options traders in the vol ETPs, and they've grown accustomed to how UVIXY behaves. And it will take some time for UVIX to unseat UVIXY in terms of volume in both the underlying and in the options chain. But, I got my fingers crossed. I hope it happens.
Don't lie to our listeners. In addition to that fancy hat, you're also wearing a UVXY shirt right now. I can see you. You're the captain of the UVXY Defense Force, sir. Don't undersell yourself. Whenever we put a UVXY poll, Jim is one of the first to always chime in on that one. So interesting stuff. I will say this. The one point I will concede in the favor of all you UVXY fans is the options liquidity. Yes, you have that one. I guarantee that. But it's kind of a weird issue. It's like saying I can get in and out better on a more broken car than the other one. I get what you're saying, but I'm still, I think, maybe I'm just too drawn to the fire of the rampaging beast that is UVIX for my own good. Mr. Meatball, you and I were kind of wondering this aloud last week. Who would be doing this? Apparently, thanks to Jim, 59% of our audience has chosen UVXY over UVIX. Does that surprise you? And what are your thoughts about some of Jim's points?
No, I mean, there's still some UVXY still has more liquidity. It's easier to get in and out of. It makes some sense that people still like to trade it. And old habits die hard. But, when that thing gets to be $6, it's not going to be that fun to trade. I'll be into who do you think is going to get to $6 first, UVIX or UVXY? That's kind of the real question.
Well, it's got to be UVIX, right?
They both can do it. It's just who do you think gets there first?
My money is on UVIX.
Has a 9-point head start.
Well, that's true. It is lower. That's right. I was neglecting that one has a little bit of a head start from a points perspective. I'm still going to bet on UVIX. The rampaging beast cannot be contained, cannot be caged, listeners. There you go. All you out there who voted in favor of UVXY, yeah, maybe I could see the liquidity point. That's the only one I will give ground on. Everything else, though, I will definitely say UVIX right now. As we keep on rolling, you know what? We got to get to the crystal ball, but really quickly, let's do a real quick Vol voicemail before we get there.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, really quick update here. Right now, our flash poll standing at 57.1% of you want to buy those VIX Jan 27s for 70 cents. 42.9% say you want to sell them. Hurry up and get in there before the end of the show if you want us to parse it on the show. But really quickly, we got another flash poll we did this week, kind of based off our discussion we had on our Option Block show on Monday with the folks from Tasty Trade. They brought up the fact that pattern day trading has become this crazy draconian monster. It used to be you got flagged for 90 days, no big deal. You come back, you do it again, no harm, no foul. These days now you do it once and you come back. If you do it again, you're done for life, at least at that broker. So it's a very different game. So we put it out to you folks. Again, the ultimate arbiters of all things here, our audience. We said, is the pattern day trading rule a necessary protection for retail traders or an outdated concept that needs to be updated or removed? Almost 85% of you, which is kind of what I expected, saying no, it's outdated. 15.2% saying yes, it protects traders. I bring it up on this show, listeners, because Mr. Jim has been very busy on Twitter this week. And again, you tweet Paulie Walnuts, you're always going to get brought up on the show. But he chimed in. You said, Jim, I personally think requiring some minimum amount of capital is a good idea. And to emphasize your point, you put in the one, the only Paulie Walnuts in there. So again, you can include Paulie Walnuts. You're going to make it on the show, Mr. Jim. Let us know really quickly here in the Vol voicemail. Why do you think the pattern day trading maybe needs to stay around, sir?
Well, look, I think that there are times when you need to protect people from themselves. And in my opinion, this is one of those places where, do you really need somebody, taking their last $1,000 and going to the roulette wheel that we call the stock market, and they're probably trading options, right? Because why trade stocks when you can trade options and get the leverage inherent in that? They're probably losing their $1,000 in short order and coming back with another $1,000. And so it seems to me that there's a logic behind the pattern day trader restriction that makes some sense. But what do I know?
There you go. On one poll, you're with the majority. On the other hand, you are against them, sir. So Jim giveth and he taketh away.
Nothing if not a nonconformist.
Over there on Twitter. That's why you got to be following us on options throughout the week, listeners, on Twitter, because a lot of fun polls going out there. But now it's time to get crazy. Now it's time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Welcome to the Crystal Ball, listeners, the portion of the show where we attempt to wrestle with the vol gods and see what they have in store. And man, I was trying to buy myself some time there because the VIX is headed my way. I am 0.2 away right now in our prognostication, listeners. VIX at about a 1376. I'm at a 1356. I just need another 1/10 of a point, listeners, and I would have another bullseye in my back pocket. But alas, it seems like the VIX gods are... I know once the show ends, it's going to be right at 1356. But it looks like I got close this far, but no farther, listeners. 1356 for me. I get the catbird seat, even if I didn't win this week. Mr. Meatball was at his palindromic nonsense of 1331. May get there. Just doesn't seem like it's going to get there by the end of the show. And Mr. Rhodes, upside road yet again, 14.5. So I was close, but no winner chicken dinner for me. Looking at all of our producers, we'll go through all of the guesses here. I see a 1330 for Queen. No joy for her. Frank won last week. He was exact bullseye. 13.25 this week, so no joy for you. Nichols, a bunch of you going in there. Producers will go through all of them. Get your prognostications in now in the live chat, listeners, to play for it. I will not look. I don't want anyone spoiling my fun here this week. So I was the closest. You know what? Tell you what. I will kick things off. I'll have a little bit of fun. Obviously, no show. Remember that, listeners. No show next week. So we're really going to have to prognosticate for 2 weeks, which is a very challenging deal. You know it's hard to do 1 week, listeners, but 2 weeks now. Now we're talking December 1st. Now we're heading into, shall we say, one of the seasonally lightest periods of the year. Now, it's still early December. It's not quite holiday time yet, so things can still pop off. But, yeah, I'm seeing a hard argument for a lot of vol upside. That said, I will say maybe we find a little bit of 2 weeks. That's so hard. I'm going to say 1325 for this time in 2 weeks. I'm going to make this note here. 2 weeks, listeners, for us here on the... All right, I have set the tone here, and let's see. Mr. Meatball, you were the next closest. I'll let you go first. Give our guest the joy of going last. Mr. Meatball, what are you feeling for this time in 2 weeks for VIXer?
So here's the problem with my palindromic nonsense is that I either have to go 1331 or 1221. I'm just not sure which one to go with.
You have painted yourself into a corner, sir.
I know. I'm stuck. I'll stick with 1331 this week. I think next Friday I might even look at 1221, but the following Friday we'll see some of that holiday premium, kind of that holiday adjustment come back in, and that'll pull us back above 13. So I'm going to say 1331. Oh,
1331 for 2 weeks, listeners. So Mr. Meatball just jumping all over me. I get a whopping 0.06. All right, Mr. Jim, you get the pride of place of going last, sir. What is catching your eye out there for 2 weeks for vol now? 2 weeks.
Yeah, I'll give you guys a little bit of room. So, the one thing that is potentially disruptive out there is the December Fed meeting. I have a vivid recollection, as I'm sure both of you do, of the December Fed meeting in 2018 that set off a little explosion. Turned out to be a very profitable explosion for me, but that's another story. Anyway, I'm going to engage in some of Mark's palindromic nonsense and go 1441.
Uh-oh. Don't let him inspire you. That way lies madness, Mr. Jim. All right, we got two palindromic players here on the... listeners. I'm looking here in the live chat. We got prognostications. They're also complaining about having been labeled pattern day traders in the past, so they're feeling some of the pain out there. Unfortunately, listeners, that music means we've come to the end of another journey through all things volatility. And, of course, For those of you on the on-demand side, that will conclude your broadcast week with us. Thank you for joining us this week. Remember, if you want your broadcast week to continue, only one place to go, theoptionsinsider.com/pro. Click on that. You'll get in to see behind the velvet ropes. You get a pass, a ticket to join us coming up for Options Oddities in about an hour. Man, we got some fun to talk about there. That should be an interesting one, including some colors we have not seen in quite some time in certain products. So that should certainly be interesting. Theoptionsinsider.com/pro, the place to go to learn more. Remember, no show next week, so we're coming back in 2 weeks. So you have to get your vol fix in the archives next week. And before we go, Mr. Jim, if folks want to check out your vol musings on the old Twitter, where should they go? What should they do, sir?
Notwithstanding my relocation to the Ballast Rock, I am still at VIXologist on Twitter, and that's the best place to follow me.
There you go, at VIXologist on Twitter. Check him out for his fancy hats and his UVXY Defense Force shirts that he loves to rock over there on Twitter, at VIXologist. Listeners, getting some 16 handles coming into the chat now. Wow, some of you folks are feeling a wee bit of upside in a couple of weeks. And Mr. Meatball, where should folks go if they want to get in on all of the pit vol goodness, sir?
Well, let me add that if you follow Jim at VIXologist, not only will you get some good info on his tweet, but you may get a random DM that will crack you up for the next for a good 5 minutes. Go to optionpit.com. I'm putting out content in my VIX Edge blog or my Trader's Edge blog just about every day. Actionable ideas, ways to trade. Make sure you check that out. And on Twitter, I'm at OptionPit.
There you go, optionpit.com and at OptionPit as well. I will add, Mr. Jim's got a pretty good gift game going on Twitter. So if you'd like to see a little Paulie Walnuts action in your life, and who doesn't? He's a good follow over there as well. Again, that's going to do it for us on the on-demand side. Coming up in about an hour for Options Oddities. Back again on Monday for the option block in crypto. Kind of a bit of a truncated schedule next week. Then we're back again for OBC on Wednesday. Obviously, no shows on Thursday, so there's no option block, no TWIFO. No shows on Friday next week for Vol of You. We're not monsters. Not many people come in on a half day. They're fighting the crowds for Black Friday. They're not coming in on the Vol of You show. So back again in 2 weeks. Another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.